Ni hao ma. Morning. Yeah, boy, it's Friday. Yeah, boy. I've already had my cohiba. Thiago, I ended up doing it late, and then I realized I uploaded it, and then apparently it failed, so I'm uploading it again. I don't know why Vimeo failed, but Vimeo failed. Yeah, what we call a series of unfortunate events. Can't believe it, I'm actually out of coffee already. All right, you guys ready to get going? Jim, we need to get you an FX Bootcamp email address. Doog music. It is Doog music. Damn, this is Doog. Alrighty. Yeah, you guys like this, huh? Signs of a deprived childhood. There's a saying, excellence at billiards is a sign of a wasted childhood. Alrighty, let's get on with it, Bubba. Uno, dos, tres. That was Gaelic, by the way. But let's go. Boom! Yeah, good morning to everybody logging in. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate. How are ya? How's your mum? Hey, my name is Wayne McDonald. I'm a currency trader. Before this, I was a venture capitalist sitting in my office. I had 3 windows with a view of the San Francisco Bay Bridge and the bay below me. It was fantastic, and I would sit there and I thought, you know what? I'm doing what I think I'm going to be doing the rest of my life. And I can't believe I got here at such a young age. Very cool. I was very happy. It was, well, I hated having a boss. My boss was he was a genius, but he was a jerk at the same time. Learned a lot from him. Learned a lot about sales. He was a great salesman. But I also learned how to maybe not be a jerk. So anyways, that's really cool. And then I was reading, and believe it or not, it was Architectural Digest magazine about a kid in New York City who was redoing his brand new apartment. He bought it. It was just I-beams. And he was on like the 130th floor of some beautiful building. And it was just crazy, right? So they had all these architectural designers in there, and they built this beautiful apartment. I'm like, damn, boy, that's a nice apartment, right? I don't know what it was, 30 million or something, right? I'm like, right? Nice, $30 million. I'd like an apartment like that, right? And then there was a little side note right at the end that never mentioned the guy's name, but just said this kid was like, 38 years old or something, and he had this $30 million apartment. And then they told a story, and he's like, well, he owned the apartment like 20 floors down, and he had bought that earlier and fixed it up really nice. But before that, he owned the one 20 floors below, and this was his third apartment in about 10 years or something. I'm like, dude, so his first apartment as like 20 something was, let's just say a $12 million apartment. Then he upgraded to a $22 million apartment. Now he paid $38 million and dumped about $6 million into making it livable. I'm like, fudge. And at the very bottom, it said it was a currency trader. Forex trader. New York City. I'm like, what the frick is a Forex trader? Because I'm just some stupid venture capitalist. I'm like, I ain't got no apartment like that, right? Living on the peninsula, and earlier before that, living in downtown San Francisco. And I'm like, dude, this guy's a baller, right? So I'm like, what is a Forex trader? And so I Google Forex, and it's like, oh, it's approaching $2 trillion a day. And like, you got to remember, this is the internet, right? Back in, I don't know what year this is, 2001 or something. I'm like, $2 trillion a day. That's a scam. There's no way it's $2 trillion a day. A day? Like $2 trillion a year. I'm like, that would blow me away. $2 trillion a day? I'm like, that's stupid. There's no way it's $2 trillion a day. So I do some more search, blah, 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 blah. I'm like, fudge. Oh my God. $2 trillion a day. Why am I pissing around with $100 million a year market? Like when there's 2 trillion a day. I'm like, I got to get into this thing, this Forex thing. And I actually really liked it in the beginning too, this idea that it was a secret. Because, when I started, retail Forex was so brand new. It was unbelievable. There were kids running brokerages out of their dorm rooms. That's how early I got into Forex. And I realized like it was just banks making all this money, right? Like this is the secret way banks made their money. And I'm like, oh my gosh. So I had to wire, I think it was $5,000 was the minimum to open a Forex account. And I think it was FXCM. It was like minimum $5,000. And you had to wire it because they couldn't accept credit cards back then. And you got a platform, but no charts. So I was paying, I don't know, more than $100, maybe $200 a month just to have charts. And you would do technical analysis over here, and then you'd open up your trading platform. And this is, I'm kind of giving you a version of an origin story because I want you to understand how I'm teaching you, and it's how I taught myself. So think about that. You go to a chart before you, right? And what did I do before the chart? Well, I would open up my trading platform, and there were some, the when you open up the platform and you see all the blinking lights of the prices changing. And then you could open up a window and you could get things like overnight volatility. I wasn't even really sure what that was, but what I did was it showed me which ones had moved. And it would show you sort of a plus or a negative, right? So I would take all that data and I'd manually enter it into an Excel spreadsheet. And I would do, euro dollar, euro yen, euro Swissy, pound yen, pound dollar, pound Swissy, right? So on and so forth. And after maybe an hour of entering, I would have all the overnight volatility, which currency pairs went up, which ones went down. But then I made basically an index. I made something like this, essentially. Okay. And what I would then look at is then I would organize them, because now it was pound versus everything, if you understand that, right? Pound versus everything, dollar versus everything, euro versus everything, Swissy versus everything, yen versus everything, essentially making an index of strong and weak. Then I would organize the strongest pairs, right? Or the strongest currencies on the left. And by the way, I had a form. I had this beautiful form I created, right? So the second step was then to take the data and organize the strongest currency all the way down to the weakest currency. And I'd put them in order. And you'd find like dollar is strong right now and Aussie is weak, right? And so I would have strongest and then weakest. And then I would then analyze. So now the third step was analyze my costs of doing business. Because back then, an Aussie yen trade was probably 9 pips, maybe even like 12 pips spread. Shows you the difference in liquidity now, right? Because we've gone from $2 trillion a day to $6 trillion a day. So now we have more liquidity, which means lower spreads, because you don't have to go so far to find someone to get on the other side of your trade. Big benefit there, right? And so I would have to analyze it, because what if I had generally the same opportunity on Aussie yen and Aussie dollar, but the spread on Aussie dollar was, let's say, 5 pips and Aussie yen was 12 pips. So I'd say, well, I'd start with the Aussie dollar first. Okay. So I'd organize all of those, right? And at the end of all this analysis, I would know something like, okay, based on overnight volatility, because I didn't know anything about fundamentals, right? So I'd say, based on what's happened over the last period of time, I'm going to start with the Aussie dollar. That's going to give me the least cost and the best opportunity based on what has just happened. Doesn't mean it, I later found out it doesn't mean I'm going to do good today. It's just that's what has been doing good, but it helped, right? So then check this out. I would already know I want to buy the Aussie dollar. Then I would boot up my charts. Only then would I employ technical analysis. And so there's where I come from. Strategy and then tactics. The strategy was look at what happened and whittle it down to my best 2 or 3 currency pairs. What do I want to buy today? What do I want to sell today? Then open up my charts, only go to those currency pairs, and then do technical analysis. Is this the right price and the right time? And very often I'd find Aussie dollar's already up. So I'd then do a Fibonacci retracement, for example, and say, oh, well, if I can get a 382 dip on a 15-minute chart, maybe I'll pull the trigger. That's how I'm going to teach you. Maybe not that exact methodology, but the strategy of that methodology, knowing what you want to do first, then doing your analysis to say, is this the right price? Is this the right time? Okay? And Jim will remember this. I think Jim is the longest, the oldest, longest member? I don't want to say the oldest member. Jim would have been there back in 2004? And this is what we were doing on a euro dollar 15-minute chart for for 5 hours a day, 16 hours a day, that kind of stuff. So the methodology hasn't really changed. The idea that you have a strategy first and then you go do technical analysis, not using technical analysis to go find yourself a trade. You see the difference? So typically I won't say, oh, go do a bunch of cross pairs. Okay? Yeah, Jim's not the oldest, right? And Jim's got beautiful hair. And Jim's got beautiful hair. But imagine that there are people here that have been learning that same way. This might be your first day, but I want you to understand what I do. And I think that may be different. So typically what I'll say is you can start with your fundamental bias, right? Jim's like, moving on. What, you don't think you have beautiful hair? Yeah. All right. Right. So we start with the fundamental bias and then we go look and try to find, is this the right price and time to employ that strategy? This time of year, there's no fundamental. So now you could do a lot more of the cross. And that's where I kind of started because I had no fundamental background or basis to my trading back in 2002. I wasn't that familiar with it. Okay. So now we're going to go to that methodology and just simply look at what's strong, what's weak. Okay. Try to get some trades. We call that shooting at rabbits. You just want, who cares about wealth generation and portfolio management? We're just trying to make money today. Okay. So we're kind of going back to more of a basic style of trading, which you might actually be more familiar with. And then we're going to add layers onto that later. So anyways, that's what I'm trying to teach you here at Forex.Today and at fxbootcamp.com. If you appreciate this type of knowledge that I'm bringing to you and like giving to you, right? And sharing with you. I mean, some people would look at the webinars I provide to you every day and say, look, this is $1,000 course. Yeah, I know. Okay. I once back in 2007, I did a big like 3-hour training at the FX Street conference in Barcelona, Spain. And I go up there, I do my presentation. And then I finished and Rob Booker was speaking next, and he had been at the back of my webinar for about the last maybe hour. And I get to the back and Rob comes up and he's like, man, you give him a lot. I'm like, hey, I give him everything, right? And so I'm trying to give you incredible value. And what's your cost? Not money, but you should visit tradersway.com, open up a demo account. Okay. That's the cost that these live streams come with. So if you could please visit tradersway.com, that'd be great. Okay. And by the way, I don't do that because I'm going to make money off of your trading and all that. That's no. Okay. They earned my loyalty and respect as a broker many, many, many years ago. You're going to need a broker that you trust. I don't know who you trust, but start there and see if they can earn your loyalty and respect too. Okay. Diago says, Wayne, YouTube is full of traders talking about graphical analysis, but when you ask about fundamentals or seasonality, they don't know anything. Yeah. Cool. Yeah, makes sense to me. Let's see if I can get this. I got to add my webcam here. I don't know why it stopped working. Video capture device. I think that's right. Add source. Razer webcam. Whoa. Hey now. Man, I never. It's funny. I only see this when I do the live streams. I don't see it when I'm walking around my office. That's paint, by the way, with silver and diamond dust in it. Unfortunately, you need special equipment to apply it. And painters I've hired, they look at that and they're like, I don't know that kind of stuff. Anyways, cool. That's why my channel is gold. Nice. Hey, scalping is fine. I have no problems with scalping. I just want you to do more than just scalping. So now we got our charts up and running. Okay, great. So look, scalping's fine, especially this time of year. It may be all that you have. So typically what I'll say is I don't even want to look at a cross rate. And a cross rate means like EuroCAD or something. But this time of year, it is appropriate. Okay? And the reason for it is I don't think right now we have a fundamental trend in play because we lack fundamental traders. We lack the normal market participants. So all we have is this sort of short-term strength and weakness. That's why I bring this up. In the old days, I would do that. I would do all my analysis. It would take me more than an hour of filling out an Excel spreadsheet that I created. And then I would come up with Euro CAD. Okay. So typically I would ignore that, but now you can do that. Okay. I don't even have a chart, but we can do it like this. Watch, new chart. I don't even know where they would put this. Euro CAD. See, I don't even trade Euro CAD. Okay, cool. Do you like that chart? Okay, change the template. See, all the normal templates I've removed. Okay, and now I can change them. Cool. Okay. And in this one, man, I got to change these. No, this is always in the wrong spot now. All right. So EuroCAD. Where did we have this? Y position, blue, Y position, no, red, green, blue. What was this? 111? Yeah. What template was this? Trend line, right? Template, save template. I just got to slowly update. What was that one? It was automatic trend line, wasn't it? Okay, I'm going to update that. Save right over it. Yes. All right. Cool. So anyways, what do we see here with this template? And by the way, all these chart templates are available at metatraders.com. All the files in the auto installer have been updated. I haven't done the other ones. I have to get my drawing tool. Epic. Get my EpiPen going. Okay. So what do you see here? Well, we have to go back. Euro's been strong overnight. CAD has been weak overnight. So we know if we're going to play that as our analysis, we're going to try to buy this. Okay? And what you would do now is wait on a smaller time frame for your opportunity. Okay? And that's that. What opportunity? That's where you employ things like moving average crossover techniques. That's where you can apply oscillators. If you want to throw in a Stokes, I would use a Stokes here. Oscillator 5, 8, that's not right. Let me open that up again. It's not right, is it? What is it? 853, isn't it? Or 835? 83. Is this right? 835 or 8583? That doesn't look right. That definitely ain't right. It's 583. Better. Cool. Nice. Okay. And I'm looking for situations like at support. By the way, if you're not at support, ignore it. This is where a lot of sort of mediocre gurus kind of mess things up. They say this is always a sell, this is always a buy, this is always a buy. That's not true. Okay? You got to be at support first. Okay? There's some divergence here. That's interesting, right? But the thing is, if you're going to use an oscillator, you're going to look at something like this. You're at support and you're oversold. And, of course, even more important than being at support, you already know you're a buyer. So you're a buyer at what price? Support when? When it's oversold and then starting to rise again. Okay? So if you don't like oscillators, how about you take the 5A cross? And then you're going to say, but Wayne, the moving averages, the moving averages, the moving averages. Well, on a 15-minute chart, we're using moving averages to analyze the speed and direction of the market. And in this case, it's mediocre. Yeah, we already knew it would be mediocre this time of year. But maybe it'll warm up. Did you guys see that retail sales? See, the issue with retail sales, if prices are going to go up, Are people still buying? Or do they say, I'm going to not buy? You remember when lumber prices were up like 300%? People said it was the end of the world. Guess what? The government didn't step in and screw things up. So what happened to the lumber market after many weeks of just prices rising and rising and rising because of supply shortages? People stopped buying lumber. But because lumber prices were high and lumber manufacturers were able to fire up the lumber mills, they're like, oh my God, look at lumber prices, hire people, right? And all of a sudden they made a bunch of boards and prices came back to equilibrium very quickly, by the way. Okay. And without government help. But anyways, here we are in EuroCAD and we're like, well, this is mediocre, but you think it has a chance of going up. And one of the things you could do is say, well, you know this is mediocre, but you also know you're a buyer. You're right around the right price. So when you drop into a 5-minute chart, do you really care about the 5-minute 200 EMA? Probably not so much. Do you care about this? No, because you've already made these decisions. So remove the information, right? Remove the information that is not necessary. What is necessary now? Well, you already know you're a buyer. You already know you're at around the right price. So now it's just simply, when do you pull the trigger? You're not deciding, should you pull the trigger? It's at what price will you pull the trigger? Okay. A bounce here, maybe use an oscillator. This one says it could have been a little more oversold. Okay. That's fine. Okay. But the thing is, you make your decision. And this time of year, it's quite binary. So you'd buy this, for example. Let's just for fun buy this. Okay. Okay, I'm not saying that's good. You should be buying it down here. But what I'm trying to say is you put your stop there, and now it's binary. It goes up today or it doesn't go up today. See, if it falls, then that relative strength has died. You made a reasonably informed investment decision, but the volatility that created the move earlier has waned. Okay, is this the right time of day to be trading? Yeah, stock market's opening in 25 seconds. So you can almost think of it like this. You have a price and you have a time. Okay, now typically I have you use this as time. Okay, so like buying gold and buying oil, I've taught you many times the exact time to be doing it. Now, you don't know if you're a buyer or a seller in those markets based on technical analysis alone. I mean, you know whether it's a reasonable opportunity or not, but what you're trying to do is catch new volume. It's very predictable that this is a time of day to be looking for a trade like this. So now this is the second chance pullback, and it's either going to do this today or it ain't. Kind of like a scalp. Not really. It's a market open type trade. Now, again, right? If they work on all. It's meta as long as you have the MetaTrader 4 or MetaTrader 5, it's broker agnostic. Okay? So, what's the basis? Euro has been strong. Has been. CAD has been weak. Has been. This could change in the open of the North American market. Maybe there were not buyers of CAD in Europe. Maybe Europeans don't want to buy CAD. They bought Nokia or something. Who knows, right? So all you have this is, and we call this relative strength. Okay? Again, no fundamental bias behind this. This is not central banks. This is not the wind in your sails carrying you. This is you floating out at sea on a raft. There's no wind, there's no current, and you're hungry. Well, there's not much you can do. Paddling's not going to do much. Probably just burn your strength. What you have to do is wait for the winds to return or for you to float into the currents. Hopefully you know where the current is supposed to be. Okay? The ocean is relatively predictable. So in this case, you're like, well, I need to spend my time making sure my raft is stable and sturdy, not falling apart. So you work on the ropes and stuff because you don't want that to fall apart. To me, that's a form of like protecting your money for when the market conditions do. Like the last thing you need is your raft to fall apart. You're not doing anything. And then the wind shows up, and then the stress of the wind pulls your raft apart and you drown. Like, well, you should be doing something while you wait. So in this case, you fix your raft, and what? What else? You're like, well, we should fish. I'll work on the ropes. You drop a line and make sure we got food. Maybe work on water collection. Maybe it might actually rain, right? Maybe it'll rain today. Okay? And that's all we're doing right now. Drop a line. Protect your money. And if you got a shot, right? You take it. Why? You're just going to pick up some pennies while you wait for the real money. Okay? Okay? All right, what do you think? Was that good? Huh? Was that good? Would you please click the like button? If it was good, tell me. Okay? If you got a problem, I'll solve it. Check out my hook. Well, my DJ revolves it. Now, you should be in this trade here. Okay? And the cool thing about it is on this, you're right, you could wait for it on a 5-minute, or you can drop into a 1-minute. Okay? But this is pretty clear. At this point, you know the 5/8's going to cross. You've kicked it off support, and this is where you wait for your fib. Hey, if you can catch a 50% fib, it's all good. Well, what if it comes down to 618? Dude, it's like 4 pips. What do you care? Are you going to buy the dip or not? Okay? And that's where you got to get your confidence. So how do you get the confidence? Well, we did a relative strength exercise. Then we did technical analysis. We have the right price. We look at the time. Market's opening. Okay? Boom. Long and gone. Down to get the pippin on. William says you bought it and it flew. Market manipulation theory works. I don't know why you typed it that way, but it's totally funny. Okay. Is this going to last forever? Is this the trade of the year? No. Okay. So that's step by step by step by step by step by step. How to put together a relative strength plan. What do you think? Okay. Is it a good trade? No. But it's a trade. What else could we do on this one? Aussie Kiwi. Wow, that's interesting. All right, so that would be typically a trade I avoid. I would typically avoid a trade like that, but let's do it. Okay. Let's use a different one. Okay. Let's do a different one here. Template. Automatic Fibonacci. All right. What do you think of this? Let's analyze this. We did our relative strength. Let me open this and fix this. got to save this now. This was automatic Fibonacci. Save it. Yes, yes. All right. What do we know? Well, based on our relative strength exercise, we know, or we believe, this is moving down. Okay? Yeah, these other templates, the things with the X's, template, see these? These are the things that you get in the complete package at MetaTraders. Not the $5 package, the upgrade. All right. It's not necessary. I'm just showing you different ways of doing the same thing. So you wake up in the morning and you see this in your relative strength exercise. By the way, just so you know, before the indices, what I used to do is I'd go to Scan Aussie. This is why I have Scan Aussie. Okay? And I would say pound is stronger than Aussie, Swissy is stronger than Aussie, Kiwi is stronger than Aussie, and US dollar is stronger than Aussie. Aussie is weak. That's 1/2 of the relative strength exercise. I realize Aussie is weak. It's on the denominator. Aussie is weak. It's on the numerator. Okay? Aussie is on the numerator. It's weak. Aussie is on the numerator. It's weak. So it's a weak across the board. I have permission now to sell this. So then I can then look around and say, well, I don't have one for Kiwi, but you'd find out that Kiwi is the strongest, right? So, because that's why I have these indices. So anyways, to go back to where we were, where were we? Oh, we were on the indices, right? Okay. So anyways, that's how you get there. And now you're in the business of selling because you are a bear. Fundamentally, no. It's just what it is this time of year. That's what it is. What's the cost of the complete MetaTrader 4 tool? Less than $1,000. All right. So, okay. This is where price action comes in. So this is hourly, okay? So you would mark up your charts like this. We call that price action. We discussed price action yesterday. You drop through support, okay? Comes back to resistance, but we call this, right? This is a roll reversal. It used to be support. Okay, let me clarify this one more time for the newbies. By the way, did you click the like button yet? Come on. Okay, used to be support, but now it's resistance. Boring. You could do this all day, every day. Okay? And by the way, just to put an exclamation point on this, if you don't know how to do this, you don't know how to trade. Okay? There are two things I believe you must have, and they're both leading indicators. Okay? Pivot points, I love them. Okay? And price action. Okay? Because pivots are really just, right, support and resistance of the market. And price action is support and resistance of price. Price-based support and resistance, market-based, right? Price action creates the support and resistance here. Pivots are market forces that create the support and resistance. As they say in Canada, it's the same, only different. Okay. So anyways, if you don't know how to do that, you don't know how to trade. I don't think you're going to be consistently successful if you don't know those things because they're both leading indicators. But anyways, so check this out. You would have got this all day, every day. All day, every day, you would catch this. Then we look at this. There's our general guide. I'm trying to get this to be right. What do we call that? Another roll reversal. Again, the basis of trading, roll reversal. Okay, this is price action. Is it always precise like the last one? No, it's not always precise. It's a guide. But bear in mind, you are a bear. You couldn't buy this if someone forced you. If someone put a gun to your head and said, buy this, you're like, I can't do it. I don't know how to do it. I can't buy in a falling market. I'm sorry. You're like, and they're like, you have to. You're like, dude, I did relative strength exercise. This is clearly going to fall. It's made a lower low. It's retracing up to make a lower high on a roll reversal. I'm sorry, I can only sell this. Okay? So anyways, new lower low, what do you set up? Lower high. What price? Well, you could do a Fibonacci. So Fibonacci is telling you this is a 50%. Okay, the lower high is there, right? You're trying to kick it off the 21. That's a general guide. Not always perfect, but it's a general guide. Okay? But a 50% retracement or a 382 retracement, it's all good. Look at this 382. Nice. So here's the thing you don't know, right? Very often people are like, how do you know which one? You don't. Okay, this, I'm trying to show you, this is a 50%. So you know you definitely want to take it off 50% if you get that chance. And here's the 382. So what you do is you end up creating a zone. Okay, you're like, I like 50%. I also like 382. By the way, I don't use 23.6. I use 21.4. This is just the standard tool. It's all good. It doesn't matter. Okay, that's the cool thing. If you know how to trade, it doesn't really matter what tools you use because you have price action and pivot points. And beyond that, you use oscillators and you might use stochastics. Someone else might use MACD. Someone else might use CCI. Someone else might use, what was it called? The alligator, blah, blah, blah. Like, who cares, dude? As long as you know what you're doing, it doesn't matter what tool. If you're a race car driver, you can probably get into any car. Some cars are faster, some steer better, some have more endurance. But hey, look, as long as it's got a seat, a steering wheel, throttle and brake, you got it. Okay? And that's another way of looking at it. Now, is that a market open trade? That is not a market open trade. But that's a day trade. Okay? On relative strength. Okay, now will you please click the like button? The little thumbs up button? It's amazing. Just barely half of you have clicked the like button. Huh? Just amazing, huh? What do I got to do? Is this TikTok? Do I have to take my shirt off? Huh? You won't like it unless I show you my boobs? All right. So anyways, another way of looking at it. William says, hey, is COT or commitment of traders reports, are they basically sentiment analysis? Well, it's position. So if you want to consider that, right? If you want to consider that sentiment, it's money that's already put into the market. They're open positions in the futures market. What we try to do is separate hedgers from speculators because we don't really care about hedgers. See, if the market is going up, they're going to hedge by selling. Well, we don't really care about that. Paulie's a car guy. Yeah, I have racing in my blood. It was actually my uncle, so my auntie's husband, my auntie's husband. So it's blood, right? One of the most amazing people in the world. Unfortunately, he died of brain cancer 5 years ago. But after making his millions as an entrepreneur and real estate developer, mostly for fun, he did real estate development, but he made his millions of being straight up an entrepreneur. And then he spent the last 30 years of his life just traveling the world racing with his buddies. Right? Very cool. So I like it. And then I've been taking my son go-karting, and he's like, boom! He's like, I'm going to kick your... Like, he loves it. You can see right away. And I'm like, uh-huh. So I'm going to send him off to either BMW racing school or Porsche racing school. And he doesn't want to do it. I'm like, dude, what do you mean you don't want to do it? Oh, I don't know. I don't know. I'm like, you love... What? What do you mean you don't want to go? Like, right? If somebody said to me, hey, do you want to go to Porsche racing school? I'll pay for it. No, I don't know. I don't really think so. Like, dude, I'd be packing my bags. Like, I'm ready. Let's go. Anyways. Did he build? Yeah, he worked on, yeah, he's the kind of guy. My uncle is the kind of guy. So here, my experience, we were in Connecticut at Lime Rock Park at the Rolex Vintage Racing Series. And these billionaires would show up. It was really cool. Really cool. These billionaires, their semi-trucks would show up. They'd have 3 semi-trucks show up. And they have staff and mechanics. And, you know, one guy would show up, and one truck is for his Le Mans car. And another one would be for his, like, you know, 1898 Bugatti race car. You know, it looks more like a tractor than a car. And then another one would show up, and it'd be his Ferraris, and he'd have 2 Ferraris in that one, and mechanics and spare parts and everything. But anyway, so after the first night of racing his Lotuses and everyone else is racing, these mechanics were working on some old car, and they were in the paddock right next to us. You know, it's like, you know, 11 in the evening, and we're just sitting around drinking wine, and I'm pouring wine. And all of a sudden they needed help. They were working on a motor, and he just stopped everything, went in there, and he worked another several hours helping the mechanics on another car, rebuild the motor so it would race tomorrow. Right? To rebuild the engine with him, and they needed a part and a tool, and he just got in there. So yeah, he's like, that's the kind of guy he was. Kevin's just like Talladega. I'm not that far from Talladega, actually. All right. Yeah, Kevin, especially like, you know, going to that vintage, you know, series, like they had the old Porsches that like Steve McQueen used to race and stuff. You're like, damn, like these guys were out there like truly a billionaire kind of thing, right? Like the owners would fly in by helicopter, just walk right in, race all weekend, right? Drink and race, and then they just fly back, right? And meanwhile, there's full companies. They would spend many millions of dollars a year just on their racing. Right? They had full staff, full teams. Even just the trucks that pulled the cars were over $1 million. And the cars inside, they might have dropped 12 million on these cars. Like, it's just crazy, right? Just crazy. But to see the old cars, and these are like museum vintage cars. Like I said, can you imagine a Bugatti from 1900 or whatever it was? Like, they're really old. They really do look like tractors. Just a big engine, a little seat on the back. You'd wear the leather helmet and the goggles, and they would race them. And probably 2 weeks later, they're in a museum somewhere. And you would never know that some dude takes this out a couple of times a year on a racetrack and races against a whole bunch of other Bugattis of the same period. Like, oh my God, how awesome is that? Right? It's sort of like they let the zebra out into the Serengeti every once in a while, that's good for the zebra, right? Usually when you go to the zoo, you see the zebra and he's rubbing his neck against the barbed wire trying to kill himself. Get me out of here, right? And you're like, oh my God, it's so sad. To see them out in the wild, oh my God. All right. Let us, okay, yens were moving. Okay, yens were moving. Okay, let's take a look. Moving how? Now, let me ask you, was this tool helpful? I built this with my mind. Okay. William took an Aussie dollar trade and it's working great. Awesome, man. No, Mr. Kennedy. So here's the issue, Mr. Kennedy. I'm on my way out of here tomorrow too. So I'm going to be logging in remotely. Again, this is just the worst time of year for me to be doing business deals because this is the only period I'm generally not in my office. As soon as I hit the June Fed meeting, it's the only time of the year for me to sort of mentally and emotionally let go from business, even though I'm here every day for you guys and I'm always watching the markets and all that kind of stuff. This is not good for me to wine and dine and do deals. This is the one time of the year I actually spend time with my children, right, and my wife. So it just, get everything set up, set up the tables and chairs, but just like I just can't start doing other things. I can't be doing a deal on my cell phone while my kids are in line to do something. You're like, I have to be a dad. I have to be a husband. I have to be a human being at least a couple of weeks a year, right? So just pause everything, man. I'm in it. I love it. Everything's good. Just not right this second. Okay, cool. Is that a deviation channel? No, those are price action pivot points. I'm essentially doing similar, not quite the same, but similar calculations of pivot points. But instead of a fixed time, okay, instead of a fixed time, it's a variable time. So think of it this way. This is sort of like, if you were bullish, this is your M3. And if you were, your M2. And if you were bearish, this is your M3. Think of it kind of like that. Kevin's like, you're addicted to, actually, I'm not addicted to trading. I love trading, but it's not an addiction. I'm a business person. I like entrepreneurs. I like deals. I like opportunities. And it's who I am. So for me, it's harder to go away on vacation. I have to work on that. But, I'm an entrepreneur. What's an entrepreneur? A hustler. You're always looking for opportunities, not because not because you need to make money. It's because it's what you do. You build things, you create things. Entrepreneurs are creators. They create something from nothing. It never existed. Then you put some entrepreneurs together, boom, now something exists. Yeah, generally money falls out of the sky because of it. But like I said, if you want to make $1 million, create 5 million in value. So I'm more focused on let's create some value. I'm always like, let's do something unique. Let's build something new. Let's improve something. Let's create value. I'm a value creation guy. I'm an entrepreneur. Right? Which also means every time someone says, well, let's spend $1, I'm like, whoa. Okay. That's not how business works. You don't spend $1. I need to see the $5 first. Everything. So every cost needs to prove it's got 5x, let's say, conservatively, of revenue. right? And of course, it's always the chicken and egg thing. Someone says, well, Wayne, if you give me $1 million today, I'll create you 5 million in the future. Bullshit. Right? No. Turn your one into, right? Let's start with 10 cents and show me the value creation. If it's not scalable, if you need $1 million just to prove you have the value, then forget it. You're a dreamer. Okay? Same thing like when you're running a startup. The first thing I'm going to look at is, your burn rate. Okay? There's a burn rate thing. If you find out that 60% of the cash you're burning is employees, is that good or bad? Is that good or bad? It's bad. Okay, what does it mean? You're not making any money. Now, it's good to have people and you're all creative and you do your powwow and you're building something really good. We're building something really good. It's going to be great one day. Dude, there's no value. You're just burning money. What value are you creating? So if I start to freak out if this number is above 30%, okay? Now, how about this? What if 60% is advertising? So you got a team. I'm not saying you don't have a team. You have a team. You're building the technology. And right now, you're burning 60% of your cash on advertising. Is that bad or good? Some of you guys are saying bad. I'll tell you what, when you're talking about a high-tech startup and you have a team and you have a product, you wouldn't be advertising if you don't have a product. What's the number one thing you're trying to do? Scale. You got to get big, son. If you built something good, if you built something better, if you built something new that the world needs, get big fast. Because you can't grow without customers. And you won't get customers if nobody knows you. So you got to break things down, right? And so if you're burning most of your cash just sitting around building a dream, it ain't going to work. But if you've built something, get some customers, get some customers, get some customers. Okay? But like a venture capitalist is not going to dump millions of dollars into a small company with very few customers. Okay? Depending on the customer, if it's retail, get your first 1 million customers and then a VC will come in and they're like, wait, you got 1 million customers paying you $7 million a month? Okay, well, let's just say 100 million a year already. Multiply that by 8 years. Okay, we'll give you a valuation of 800 million. Okay, so now we will give you 20 million in cash. I guess you wouldn't need it under those numbers, but whatever. Maybe it's 100K a year. Okay, so let's say you're making 100K a year. It's not much, but you're onboarding customers, and so they'll say, well, they'll give you an $80 million valuation and put 20 million in. Okay. Right. So now post money, you have a post money valuation of 100M. Okay. Whatever. So there's a process. Okay. So anyways. So what do you want to do with Aussie yen? Well, bulls are thinking this. Bears are thinking this. That's that. Watch Shark Tank. Okay. All right. Cool. Neat. Great. What does our model show, by the way? Our model, when you turn on bearish settings, let's redo this now. First of all, this looks like we're on Confluence, right? Interesting that there's no watermark. Yeah, well, that's set probably right. So how come the other ones are all way off? Well, anyways, we'll have to work on that. That's not quite the right color. Okay. So let's change all this now that I've done that. Let's change this and say position trading bearish. Okay. Look what the tool tells you. Let's go to a 1 hour and try to get this in. Actually, and I need to adjust it. This is all I'm doing here is turning on the midpoints. Okay, you want these on to get your conservative targets. Okay, so let's go back. I guess I'll put it on a 4 hour and just kind of zoom in a little bit. Okay, give it one more. All right, cool. What does this tell us? Well, first of all, I got those trend lines. This is the sell zone, and you knew this July 1st. You actually knew it before that, but it was set in stone July 1st. And the target, right, is here. So once again, as I said earlier, if you don't know pivot points, you're really going to be challenged. Don't you stink? We knew this 16 days ago, right here. We had all of this set in stone. This is the sell, and this is the exit. Do you agree that this might be helpful? Let's do this in black again. This is the sell, and this is the exit. Perfect? Not perfect, but is it helpful? Yes or no? Danrick says, how do you get the updates? Just log back into MetaTraders and download the installer. Okay. Now, is it everything? No, it's not everything. Stop looking for perfection. Realize that what you're doing is making a decision. Okay, if you are playing poker and you're holding 2 jacks, and then you get a flop, 7, 10, king. You can very, very quickly calculate your odds. Does it mean you're holding the best hand? No. The guy next to you has pocket queens. There's no way for you to know that. But you have pocket jacks, so great. So you're not under threat, right? What do I have? 7, 9, and a king. So the guy next to you places a bet, and you're like, oh, okay, well, I got a pocket jacks. He can beat me if he has a king. You see the problem there? And you're holding jacks, and he bets. Now, if he bets big, you should probably fold your jacks. Okay? Now, okay, let's change this. 7, 9, and a 10. Guy next to you bets big. You're holding pocket jacks. Now do you bet? Yes, you do. Why? Because the only way he could beat you is he's got 2 queens or 2 jacks. Or 2 queens, 2 kings, 2 aces. You don't know he's got 2 queens, but you're like, oh, the probability of me getting 2 jacks and he getting 2 queens or 2 kings or 2 aces is pretty low. Okay? So you're changing the probabilities. Or you're calculating the percentages. Okay? If a jack gets thrown down on the next, or a straight, but right, once again, yeah, so you're calculating, yeah, so since I changed that, yeah, he could hold an 8, right? All that kind of stuff. So yeah, you're right on the straight. I wasn't even thinking about the analogy, but you're calculating the probabilities. Okay? And this is, you're never going to get perfect information. You understand that? The charts are not going to make decisions for you. Okay? So now what? Kevin says, did we discuss this yesterday? I think we did, didn't we? I just grabbed this one randomly. To me, I'm just analyzing it, right? So is this bullish right now? No. No, it's not bullish. Okay? Okay? But I'm trying to get, especially the newer folks, this idea like if you don't have this information, you're trading a little bit blind. Also, if you're not trading like price action, okay, then you don't know that that's a sell zone, this area here. Okay? And so, again, if you're not using pivot points, you're a little bit blind. If you're not using price action, you're a little bit blind. And so now, a little bit blind and a little bit blind, you're actually quite a bit blind going in against informed professional traders that are bigger and apparently smarter. You're not going to survive. You're going to walk around in the desert. Let me tell you about heartache and the loss of God, wandering in hopeless night. Huh? Have you ever felt that? Imagine the feeling that the poem is trying to portray. Your loss of God, like all meaningfulness in life, and then even death. Like you've just completely given up. Heartache and the loss of God. Wandering in hopeless night. Out here, there are no stars. So if you're a little bit blind, that's what it's going to lead to. You're like, dude, I can't believe I lost 50 grand trading Forex. It must be my broker manipulating me. Oh, well, I paid money for that signal service, and for some reason, I paid $100 a month, and they didn't make me rich. It's decisions, guys. You need to make decisions, and you have to pay attention to your probabilities. And even then, you're always going to have imperfect information. But you do have to know how to play poker if you're a poker player. You'll never have perfect information. You don't see the cards in the deck. You don't see cards that the fellow traders have around the table, but you know how to play poker well. And you're like, okay, I'm holding 2 jacks. I know there's only 2 left. There's 7 people on the table. What's the chance one of those have a jack? And you're changing your probabilities. So if I have 2 and they have 1, but there's 7 guys, then what's the chance the other guy's going to get the other jack? Well, the other 6 guys are probably going to get a jack, or maybe I get the jack. You're like, okay. And it changes your probabilities. You got to pay attention to that. And then you're playing your jacks, and then shoot, that idiot over there got a straight. And you know what happens? Very often you didn't even see the possibility of the straight. And you're like, oh, I didn't even see that. I was so concerned about the jacks. Happens, man. But that's why we don't go all in and we don't bet. Or maybe you do. I don't know. Is this a bearish market or a bullish market? Well, right now on this time frame, there's nothing bullish about this. Kevin's like, Wayne, your course is awesome. Thanks, bro. People should get it. Watch every video over and over and over again. Hey, it only took 15 years to make, huh? So there's nothing bullish here. So why are you buying it? Right? Yeah, Johnny, and that's the worst, right? Where some jerk throws down 5 hearts. You're like, oh, you a-hole. I can't. Oh, you're like, oh man. You're almost mad. You're like, dude, that's not a real hand. You're kidding me. You got 5 hearts. Oh, you son of a. But I built this. Oh, and you're like, oh. Yeah, they catch it. I hate that, right? You're like, dude, wait, you didn't get that last heart until the last, oh my God, you idiot. And that's somehow I feel about trading though, too. Sometimes the market is just stupid, but you still have to get it out of the way. And that really throws basically what Johnny is saying is this guy's got nothing in his hand until the very last card, but has been betting big the whole time. And you're like, dude, there was a 90% chance on that flop that you were going to lose. And then, yeah, okay, another heart showed up or whatever. And so, but you still had a 70% chance or whatever. Well, in this case, you only had a 25% chance of getting the card you needed. You had 75% chance of losing. And you bet big? Are you an idiot? Well, it's fun. Fun? There's no fun in poker. I get mad. I can't play poker with my wife because she has fun. I'm like, there's nothing fun about it. You're not supposed to do that. You played it wrong. She's like, well, give me your chips. I'm like, oh, damn it. So in trading, you have to be able to walk away from pocket jacks. And a lot of people can't do it. And I'll tell you, the translation of the analogy, in all the years that I've played tournament poker, I never lose. Now, here's the thing. I think I've only won once, maybe twice. Okay, what's the definition of didn't lose? So let's say the buy-in is $100. Okay? So I buy in. At the end of the night, I go home with $150. Some other jerks got $500. Okay? I rarely win. Why? How do you win? Well, the reward, so you want to win big hands, right? You want to win big pot, which means you have to take risk. You have to push even when you don't have the right hand. You need to go all in and push the other guys and get them, but you don't quite know what they have. You're always in a situation where right? You win or you bust. And that's how you win, because for some reason you get lucky in a couple of hands and then now you have a big stack and then you push a few people out, right? But I don't play poker that way. My goal is usually to be one of the last three people at the table. Very often, if you're playing with buddies, you say, okay, when you get down to this, right, you get to that point, you get, X amount of dollars back. Cool. So I go back. I had a great time. I'll play the game for 5 or 6 hours. And very often I'm still the small stack against two other guys, but they took the bigger risks. And I get my money back. I have a good time. Everybody says, hey, Wayne's a pretty decent poker player. And I leave. It was a good night. Okay. That's how I trade, by the way. I never go for the big win because I will not take the risk. I'm not willing to go bust. My goal instead is play to the end. Stay in the game. Okay? Alex says he had big problems walking away from a good hand. And that's the psychological challenge of what we do. But what would you trade differently if you know your number one goal was to be a trader 3 years from now? See, when I did my pro forma cash flow statements at my business planning retreat with myself, I did the pro forma cash flow statement, and I did it daily, weekly, monthly, quarterly, and annually. And it occurred to me that when I get to, let's say, year 1, year 2, year 3, if I get to the end of year 3, I'll have this amount of money. And it was a really cool exercise because I could change the amount of risk and how much I save and how much I pay and all this kind of stuff. But doing this process, I realized, oh my God, if I start with this amount of money, with a certain amount of risk, and I pay myself a certain percentage and the other percentage goes into the account or stays in the account, and I grow at a certain, I move my lot size relative to my money size at a certain rate. So those are all variables. I realized I can be super conservative, right? Super conservative. Over 3 years, keep lowering my risk. But at the end of 3 years, okay, it was very apparent I had more money than I really needed to make. So when I first started this at my current level, right? So way back in the beginning when I did this, I started with my current level of money, my current level of risk, and the amount I pay myself. And we'll call this income. Okay. So this was fixed. I only had the amount of money I started with the current risk I had and how much income. Well, at first I didn't include the income. I just wanted to say, what's the absolute return possible? And this was like $100 million. Like, no joke. I'm like, wait, $100 million? Maybe I'm over leveraged. So instead I reversed this. So let's just say my goal was in 3 years to make $1 million. Then I'm like, oh, well, I need to reduce the risk here to get that target. Okay? So all of a sudden I'm like lowering my lot size big time in year 1 because I know year 1, day after day after day after day after day after day, year 2, day after day after day after day, day after day, year 3, day after day. And then you get to your $1 million. I'm like, oh, so I only need to make, let's say, on average 10 pips a day or whatever, right? Over long periods of time, you're like, oh. Then I played with the income, which was really interesting. So I started like what I thought I would pay myself. And all of a sudden I found out that this would then drop to 250K, let's say. I'm like, what the? Oh, because I'm not compounding my account. Okay. Kevin, maybe 100 trades a month is a good start. Okay. So anyways, so I realized this income variable was really huge too. And I started playing around with stuff, and I found if I made my most amount of money paying myself once a year. I looked at paying myself quarterly, and I looked at paying myself monthly. Oops, I guess that's monthly. If I paid myself monthly, even if it was the same percentage as annual, it would draw me all the way down here. So I'm like, well, I don't want to pay myself monthly. So then let's say it was, pay myself 20%, save 80%, right? Which is the what I'm trying to figure out here. So let's say then I pay myself 80% quarterly, and this gets to 400K. And you're like, well, that's really interesting. It's still the same percentage. But see, my lot size is going to be growing faster because I'm not withdrawing money as quickly, so it can grow, okay? And then I found, well, that's interesting. And then I pay myself annually, right? And that gets me to, it was crazy. It was like 700,000, let's say. Then I say, okay, so now I got to go back to here, or I guess here, because the first one's fixed. And then I said, okay, well, so I need to take a little more risk. And so you add like one mini lot, and this gets you to 800,000, or that'd be more like 900,000. You add one more mini lot, and it's 1.3. So then you're like, okay, so boom. So now you're in there like 1.5 more mini lots here will get me to my $1 million, but I'm paying myself annually, right? And my lot size is 1/10 it used to be. 1/10. And then I realized, oh my God, I just have to hit these really basic daily goals and weekly goals and monthly goals. And I'm focused on the easy, boring trades. Do you understand that? The easy, boring trades, day after day, month after month, year after year. And you get to your number. And I lowered my lot size. I lowered the pressure. I lowered the stress. And I'm never going for broke, because if you go for broke, you get broke. Never. I realized, oh my God, I never have to have a big trade. I never have to be sweating bullets. I never have to be stressing. I never have to go big. I never have to gamble. And it changed my life. I'm like, oh my God. Oh my God. Oh my God. Okay? If I have a bad day or a bad week, it's okay. It's okay. I got lots of time. I'm not under pressure. A bad week is not a horrible drawdown. It's a disappointment, but you're like, oh, well, I have better than average weeks too. And what happens is over the course of a year, okay, over the course of a year now, oops, didn't mean to do that, but let's do it there. Over the course of a year, it all averages out. Your bad weeks will get taken care of by your good weeks. Your underperformance will get taken care of and wiped clean by the weeks you're overperforming. Why? Oh, it's usually just because of seasonality, for example. We call that the beta. The beta gave 1 week, the beta took away another week, okay? So what's left after all that? Your big winners are paying for your losers. So what's left? The middle, the boring. Okay, so you statisticians will say, oh, so you're talking about fat tails. I'm like, yeah, okay, so you got this, okay? And then you look at your normal distribution, and then you say, well, there are periods where you have wins. You have periods in where you have losses. You're big, you're bigger than average wins, and you're bigger than average losses. But all of this takes care of all of that. And where is 90% of your money made? In the boring trades. The boring ones. The moderate risk, reasonable reward, day in and day out, boring Forex trading. You never have to like click the button and then jump out of your chair like, oh my God, please go up, please go up, please go up. You're like, dude, seriously. That's not how you trade. That's how you go broke. Okay? If you're going for broke, you're going to get there. And so all of a sudden I'm like, oh, I don't even need to try for these. That's a fat tail here. And if I never go for a big win, I'm never going to have big losses. And I changed my distribution. Okay? And then so if you plot this on a normal type graph now, what you're going to have is something like this. And this is your trading and your account size, right? All this kind of stuff. And then once in a while you have a big win, once in a while you have a big loss, but it's rare. Those are outliers. It rarely happens. Something massive like news goes against you while you're sleeping or something, right? Happens, man. It happens, but it shouldn't happen often. You can have some losers, you have some big winners, but okay, these are like your average pips or something, negative pips, positive pips, whatever. But you'll see that over long periods of time, your account just grows. Okay. Yeah. Oh, well, I'd have to think about this more. What are they? I'd have to think about it, but right. Cause you'd have to translate that. What would it be? I could probably say, I was thinking maybe pip wins and losses above and beyond the mean, but no, I'm probably thinking of more like growth, because we were looking at, right. We were looking at the normal distribution, removing the fat tails and looking in here, and I'm trying to show you growth over time. Right. So, but anyways, I'd have to think about it. Okay. It's not a dissertation. I didn't have this pre-planned. Sorry. Okay. Yeah. Sorry. Sorry. No dissertation today. But hopefully today was helpful. You're good people. I care about you. I want you to have a good weekend. I'm going to spend some time with family. So it's an interesting world, isn't it? So on Wednesday, I was on essentially the border between the United States and Mexico. Right? I couldn't walk any farther south in the United States because there was no more United States. And so on Monday, I will be trading with you guys Monday morning, doing our Monday morning live stream, except I'll be on the Canadian border. Yeah, for sure, eh? So it'll be interesting. So what a lucky, wonderful world that I live in, where you can easily do something like that. I can just go. And not to worry, everyone in my family is vaccinated, at least my wife and kids, and we are bringing masks, right? Okay. What? Yeah. Well, Darko, same thing I was telling Mr. Kennedy. Look, I want to talk with this dude. I did read your email. I'm totally into it. Sounds super exciting. This is like the 3-week period of the entire year where I focus on my family, right? And I'm just a guy, like, no matter how big the opportunity, if I'm walking down the street with my son, my daughter, and my wife, and we're spending time together, I will not answer my phone. I don't check email. I don't post things on Facebook. I'm a kick-ass dad and a kick-ass husband. So this period, Darko, like doing business deals. I want to do business deals. I love it. Totally. I'm super excited. I'm just not available right now. So you just have to tell them. Right? Yeah. Like, look, anytime a business deal has to get done in 2 weeks or less, it's not a business deal for me. Because it's like, dude, if the opportunity is that sensitive, then it's probably not real anyways. But yes, I think we got some exciting things there, Darko. And I do want to explore it. So let the players know, right? We're setting up the game. It'll have to wait. Okay. And I got to fly to New York City in August because I got another deal going there, and that's been pushed off for 8 months. And I'm getting a sense that they're going to walk if I don't do it. So I'm like, dude, oh my God, there's too much going on. Right. Like, oh my God. So like, yeah, let's make it happen. Right now we got every deal is precious. Let's just say it's a good time to be alive. Yeah. But that particular deal, Darko, I think is time sensitive, so I do prioritize it. All right, cool. So I will see you from absolute middle of nowhere, total isolation. But the theory is I have internet. I'm going to work on my laptop so we don't face that problem. And I will see you from up north, eh? Peace on earth. May the pips be with you. May our profits be above average. Cheers.